All right, folks, we're into our third and final course associated for Treasury Management, which is taxes, compliance, and audits. In your organization, these are the standard pieces that have to be completed to keep your not for profit on the up and up with your regulators. So, we need to make sure as we're going through the management of these organizations that some of these check boxes have to happen, some of these things have to be completed. We have available a checklist of all the items that you have to get done that's available. Just send us a note after you take the training and we'll get that sent on over to you. We're going to talk in this course at a high level for the taxes, compliance, and audits that you have to get completed. One thing of note before we go through it, um, you always have the ability to get all of this information out of a well populated accounting system. Gets you absolutely everything you're going to need in for all of the pieces that you're going to need on the other side for all of your taxes, audits, and compliance. So the first piece, and this is the biggest piece, is the federal tax form, that the federal 990. There's three versions of this form. There's actually more than three, but three we'll talk about here today: the 990 postcard, 990 EZ, and the 990 full. So that first one is if your organization makes less than $50,000 in revenues a year, then you can qualify for the 990 postcard, the 990N. And that is a very simple form. It's required to be submitted electronically, and it has just a couple pieces of information. You really don't even have to keep accounting records at that level as far as the IRS is concerned. You really just need to submit your name and your EIN number associated with the not for profit, and you get it submitted. It's a very quick, easy process. The short form and the full form, they have quite a bit more to fill out on them. And the short form is if it's less than 200,000 and that full 990 is greater than 200,000 in revenues. The key part about the 990 is it takes the data from your accounting system and it gets translated right into the 990. The vast majority of the data in there should be kept track of already when you're doing your accounting. If you're doing your accounting accurately, that data just gets to plug right out of the accounting system right into the 990. And then from there, we need to add in the descriptive parts that really make your organization special. Talking about all the things that your organization does that makes it unique and why it is a non for profit, how it supports the community, and a full description. You also put some information in there about the board of directors, and there's a few other pieces you might notice in there as well. But for the most part, it's the only data you need comes right out of the accounting system. The next thing you have to work on is the state tax forms. So most states do not have a separate form that they need you to file. 44 of the states do not need you a separate form. They're good if you do the IRS's 990. As you'll see through the rest of this, that 990 is the biggest requirement out there. Most of the rest of these are much smaller. California and Indiana require a separate form to be sent, but it's a really small form. And once you filled out the 990, it just takes a little bit more effort to get that state form completed. And now, this is one that I see hanging up not for profits a lot. I think when most of them come to us, we find that at least half have missed this requirement. You need to have a charitable solicitation form completed in the vast majority of states. If you would like to receive fundraising, having people donate money, you're meant to be registered on this charitable solicitation form process. Most states just want you to send them a copy of the 990, but a few states also have a specialized form and fee that they charge every year. For example, California's RRF1, I think, is a $60 fee that you attach your 990, you fill out a couple of key pieces of information, and you send that on to them. For the vast majority of these places, you could check on the state's website what your current level of compliance is. Another good one here is donor reporting. Now, for donor reporting, as I had mentioned before when we were talking through how you get the data, when you have inside your accounting system, money that comes in needs to be recognized by who that money sent it, how much they sent it. This is pretty common because most folks who are receiving donations know exactly who sent them the money. And what your best bet to do at that point is to send them a thank you card. Thank you for sending us this donation of $251. This is our name. This is the date you sent it. This is the amount. This is what you gave us. And then you need to say on there, no goods or reserved or services were provided in exchange for this. That needs to be in there explicitly. But it's meant you can combine a thank you with this mandatory consent. And this should all of this data is already going to be inside your accounting tool because it will be notated that you had a deposit of $251, and you'll have to look where that deposit came from. The accountants need to see where it came from, and then you could pull reports out of there that meet this no problem. Quid pro quo donations. This is something to take a look at when somebody buys a dinner ticket or purchases an auction and there was actually a value and a donation associated. Those need to be broken out and split out for folks so they can see exactly what that looks like. To say dinner was valued at $50 and you gave us $100 as a donation. So they don't get the whole thing when they purchase a ticket for a dinner or if they bid on a Hawaiian vacation. Non-cash property donations, those have to have a special form and a special process. If you find yourself receiving greater than 5,000 in something that is a non-cash donation, then you need to make sure you talk to your CPA or your tax preparer and make sure you get that form 8283. They're going to want, the person who donates this is going to want this as well. And that's the reality of all the donor reporting is they're the ones who really want this. It isn't going to have an effect on the not-for-profit's bottom line or likely their compliance, but your donors definitely want to know that they need to have a receipt. And it's a best practice, and it is required. So 1099s, this isn't, of course, specific to not-for-profits, but this is a place that they get caught up on a lot. As of 2026, any contractors and consultants paid greater than $2,000 need to be sent a 1099 NEC, or if it's rent settlements, 1099 MISC. And the important part to note about this is there's exemptions that are listed out here, and certainly you want to find out what those are. But your best bet before you send anybody money, when cash comes out of your checking account, you should have requested a W-9 from that vendor. That takes all of the responsibility of filing a 1099 and makes it much easier for you. If you request a W-9 with absolutely every vendor, then you put the onus on whether that person meets these requirements or not on the vendor, and you take that responsibility off of yourself. I like to put this slide in here about audits. If you're receiving federal grants, you have a federal requirement to get an audit. If you're not receiving federal grants, the federal government could care less if you have an audit completed or not. So at the point that you're receiving $1 million in federal grants, and you will have been having audits done for a long time at that point, by the time you started receiving this amount of money. But this is to say that the only people who would care that you had an audit would be the state that you're operating in. And I put this in here because it is not required for all not-for-profits to have an audit by any means. Any Smaller, if you're smaller than $2 million in the state of California, you have no requirement to receive an audit. And that's by 2 million in total revenues. New York is 1 million, Massachusetts is 500,000. So a much stricter audit requirements in Massachusetts. And then in a few states there, it's based on how much donations you receive, not based on how much revenues you receive. So an audit is a very expensive thing to get into. And unless it's required, it's not necessarily something that you want to jump into. Here's a couple other items of note. And of course, this PowerPoint will be available for download. You have corporate compliance for the Secretary of State. You're always going to have to do that. If anybody asks you for your 990, you have to submit it to them. So that's something to keep in mind. And that's circling back to that first topic where we talked about the 990s being a description of what the organization is up to. These documents will be made public. It's folks know that these go out, but the thing to really note here is that this is a public document. People are going to see it. And this is your opportunity to tell them that story. It's an opportunity to write in here all of the good work you're doing.